Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, November 8th at about 2 p.m. Eastern. Well, the S&P 500 and the Dow are edging higher so far today, putting them on course for their best week this year. The S&P 500 benchmark index has already touched the 6,000 mark today about an hour ago, pulled back just a little bit from there as this week's upbeat market sentiment got a further boost from the Federal Reserve yesterday, Thursday of this week. The Fed cut the benchmark rate by 25 basis points. We'll take it. And on that note, the positive note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. The SPY is the ETF that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $598.76, as you can see. The SPY flew higher this week. It officially made a new all-time closing high on Thursday, yesterday of this week, right here, at $595.61. Now, as we can see here, it has hopped pretty high above the 20-day and 50-day moving average. The 20 days, the red line, 50 days, the green line. So it is trading now at a 3% premium to the 20-day moving average. That's a big premium. The 20-day is coming in at the moment at $581.53. It is also, is that 58 or 53? That's 53 cents. Okay, it is also trading at a 5% premium. Look all the way up here, a 5% premium to its 50-day moving average, which is coming in at right now at $571.30. So the SPY has managed to hop up pretty high, of course, to new highs here. And excuse me, it's very bullish, but of course, as traders, we need to, we need to be careful. So if we look back here at the July highs, just to get some sense of what's been going on, we were sailing to a new high, a new all-time high here back in July at $565 right here. We can see it. Then the SPY, everything was going along fine. It was pretty much walking up the 20-day moving average as it had been doing for some time. Then all of a sudden, the SPY took a dumpster dive here. It rolled over and dove to an August 5th low down here, gap down to open at $511.64. So that certainly gave up some of the run up it had had in May, June, July, and so forth. Gave that back, but we've got to give the SPY credit. It rallied dramatically after that. Back up over the 20-day, back over the 50-day, moved back up to about 565 here, back up to its July highs, and then stepped sideways and consolidated 464 is 565 through August. Then in early September, it rolled over pretty quick again, but just for a few days. Dipped down to the 20-day and the 50-day, down to about $539 and change. Then jumped up quickly again, back over the 50-day and the 20-day, and rallied back up again to September highs here. Then I'm trying to see where my September highs are right here, probably right under 580. Then walked up the 20-day moving average to October highs here at 586, then the 20-day, then back down to the 20-day, and then down to the 50-day moving average here week before last. Sat on that 50-day moving average down here, down at 571. So we usually don't always, we want to stay bullish. We want these indexes above the 50-day moving average, and the SPY did that. For week before last, it walked along the 50-day moving average, but then this week, this past Wednesday, as you can see, this was Tuesday right here. Then Wednesday, it rallied back up here and back up to where we are at 598.76. So we have nearby. Now where are we going? Well, we know we're in new high territory, so we can't really say we have resistance here. We're going to call resistance at 600 because that's where it went up to today, and that's our hard round number. We also have, if it starts to fall from here, and traders, please know, if you are one especially, you know this, traders take profits. So we can be in a bull market, but we get pullbacks in it. That's just the way the world works. So we do have, for potential support, we do have the October highs here at 586. Again, we have the 20-day moving average for potential support and also price support here coming in at 581, 582 right there. We've got the 50-day moving average coming in here again at 571.30. So we have plenty of potential support lines here. We do have, again, the September low if we need it down here at 539. If I could draw a straight line, I could get it down to 539, and the 200-day moving average coming in at 537. So remember before a few weeks, we have been drawing, as we talk about this, we have been drawing trend lines. So we drew a trend line up, and we can even draw it up from here to down here. We were saying that price breaks out. When you've got a pattern like this, price is either going to break out or break down. Well, guess what? It broke out. So that's what we have now is bullish. We do have more earnings announcements coming in the coming week. We have Cisco, Disney, Shopify, some of those. And while this is, of course, a very bullish market, keep in mind that short-term traders take profits at times, so everything isn't going to go straight up forever. I know this looks bullish. And certainly it can stay bullish, moving like that, higher lows, higher highs, definitely bullish. But just keep an eye on your protective stops and continue to trade wisely. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market, including large cap momentum stocks like Nvidia, Meta, Apple, Tesla, that whole group. Now, when I captured this chart today, the QQQ was also trading near record highs at $514.27. Like the SPY yesterday, Thursday, we had an all-time closing high this week at $513.54. So that's the official all-time closing high so far. Now, we can quickly look back here at the August 5th lows. We know that back here, the Qs dove below the 20-day moving average after making these July highs up here. In July, we know that the QQQ did a real dumpster dive down here, opening on August 5th at $424.71. But then it rebounded in the following 3 weeks, moving up at a very steep angle, back up through the 20-day moving average, the 50-day moving average, and made an August high up here at 486. So that was good. Then, of course, as price does, it has to go lower to go higher. It rolled over down here to 448, back down through the moving averages, then rallied again back through the moving averages to the September high up here at 494. Then back down to the 20-day moving average down here, then up to October. And in October, it kind of moved sideways here. It finally ended October right here with an all-time high at 501. So we were looking, okay, this is cool, but we were noticing that price kept getting closer and closer to the 20-day moving average. You can see here it just lost some of its mojo. It lost some of its energy in October. And we're watching it with a tiny bit of worry in our eyes. And then it dropped down here, as we kind of thought it might, down to the 50-day moving average, came down here. And the 50-day was coming in here. It came down to about 483 or so. But the 50-day now just a little bit higher at 484.62. So it sat above this 50-day moving average. That gave us a little hope. Then on Wednesday here of this past week, it did gap up above the back up above the 20-day to open at $500.56. That was a new high, almost a new high here. Then kept on gapping up on Thursday of this week, and then today, as you can see, where we are kind of even with yesterday's high, again at 514.27. Now we can say here that we do have potential price resistance here at 514, 515. That's where we are right now. That's nearby resistance. We have support at the October highs at the October highs at about 500. So that's good to know. We have the 20-day moving average again coming in here at $495 and change. We got the 50-day moving average coming in at 484 and change, and we have potential price support at about that same line. Then we can look down here. We have the 200-day coming in at 460 and change, and so seasonally speaking here, if I could talk today, we do want to remember as we see this, it is bullish. Also, another bullish point here, seasonally speaking, the best 3 months of the year are November, December, and January. However, again, price doesn't go up forever. Traders do take short-term profits. So, and some of you may want to take a little bit of money off the table here and take your profits. Just know that we do, again, have more earnings coming out this coming week. So, again, please do mind your protective stops. Our next chart today is a daily chart of the iShares Residential and Multi-Sector Real Estate ETF, the REZ. Now, we haven't looked at this before, but I found it kind of interesting as I came over it. I came to see this, the sector, and I've been watching it pretty closely recently. Again, this is a daily chart of the iShares Residential and Multi-Sector Real Estate ETF, the REZ. We'll call it RES just to make it short here. It does have 39 holdings, including some of the top holdings include Welltower, Public Storage, Equity Residential, Extra Space Storage, and Mid-American Apartment Communities. I know that real estate and digital are really getting together now, and with lower interest rates, at least being encouraged by this week's Fed drop, this may come more into play here, so I want to keep an eye on it. From the April lows here, if you look left on the chart, you can't see April lows here, but please know the RES had April lows at 67, so we can see May here. And from the April lows at 67 up to the September high here at $91.64, it had this whole run up here was a 38% run up, which is very nice. Also, what I like about this, as I'm sure you'll appreciate, the run up was very, very orderly. I'm kind of amazed at how long it could stay above and trade at a premium to the 20-day moving average. However, we know, of course, that stocks, ETFs don't move up forever. They have to move down to start moving up again. But still in all, this pullback was orderly too. So we know that it moved up to that high at 91.64, then dropped to October lows down here in an orderly fashion to $84.42. Then it rallied back up here to 88. Then fell back down in the end of October to 84. Not much lower though, just a few cents, then came and rallied back up here to where we are today at $88.26. So yes, it was hectic this week. I will grant you that. It wasn't totally orderly. Most things weren't. With the interest rate drop again, I am going to keep an eye on this REZ. So in the coming week, if the res can stay above $85, $85 comes in about here. If the res can stay above $85, because it is now again above the 20-day, above the 50-day, these two moving averages are inverted. Definitely from this price move down here in September into October, that would have moved the moving averages into an inverse position. The red line, the 20-day, is starting to roll up a bit. And if price goes up, of course, the 20-day will come back across and come up over the 50-day if that happens. So, of course, we'll be using our protective stops here. So in the coming week, if the REZ, the res, can stay above $85, that's going to be my line in the sand here, I will buy a small position of the res in my trading portfolio. I'm going to put in my stop, a pretty tight stop here at 84.50. Of course, if you want to put it down lower, that's entirely up to you. If and when the REZ can rise above this next kind of potential price resistance here at 89.50, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the REZ in the coming week. And now check out this news from ToniTurner.com. As you may know by now, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. How to profit using support and resistance, and that's, I don't see it listed on here. You have to go to the link or the orange button. How to profit using support and resistance is an easy to understand, information-packed training program in which you'll discover how to identify profit, making price points and uptrends by using my ICE or ICE technique, and you'll learn how to maximize your trading results with my 6-point trade list. Now listen, people, everybody yawns when we say support and resistance, like, but please know this. It is the most important knowledge you can learn in trading. Didn't I just spend 3 charts explaining to you where support is? Support is where the buyers have come in before and will probably or may come in again. Resistance is where sellers sold before, bears sold before and may sell again. You have to understand support and resistance when you are a trader. It's key. So don't yawn when we say support and resistance. It's the most empowering and important knowledge you can learn. So that's why this program is so important. Our new discounted price for this program is only $97, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. From our ever-popular right here, I love this one, 7 Steps to Successful Trading, how to swing trade successfully. We talked about that last week. How to trade the trend to profits, how to read charts. Great for novices, 3 winning setups, great for short-term traders, bottom fish like a pro, and of course how to profit using support and resistance. Find out how these timeless online programs can help you earn more money quickly and easily, and that's what it all is about, right? And once you purchase, you have unlimited access. You learn at your own pace. So be sure to check out these programs by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.